There are moments in life where time seems to split, when you wake into a day suspended between hope and hesitation. It was one of those days, the sunlight barely creeping through the blinds, the world still caught between sleep and wakefulness, and in that fragile hush, the screen lights up. Bitcoin slipping below a familiar level, a number you've seen before, a threshold that carries weight not because of what it is, but because of what it represents. For some, that moment sparks fear, a tightening in the chest, a question of, what if this keeps going? But for others, something very different begins to form. Not panic, perspective. Not fear, curiosity. Because beneath every drop, there is always another question quietly waiting. Is this risk, or is this opportunity? Before we go further, take a moment. If you're drawn to understanding these shifts, not just reacting to them, subscribe to Crypto 101 Central. And if you want to stay connected as these moments unfold in real time, turn on notifications so you don't miss what comes next. There it was, coffee in hand. Watching the market breathe, because that's what it does. It breathes, expands, contracts, pulses between extremes. And every time Bitcoin dips in a phase like this, something subtle changes in the atmosphere. There's tension, yes, but also anticipation. A sense that something is building beneath the surface. And the same question returns, as it always does. How does conviction translate into action? Not in a day, not in a week, but over years. How does belief in Bitcoin's long-term trajectory become something tangible, something structured, something that can be expressed beyond simply holding and waiting? In previous moments like this, different approaches have emerged, strategies designed not just to follow Bitcoin, but to interact with it, sometimes amplifying exposure over longer time horizons. And historically, in certain conditions, some of these approaches have even outperformed Bitcoin itself over specific periods. But nothing comes without trade-offs, because with greater potential upside comes greater complexity, greater risk. These are not simple paths. They demand patience. They demand understanding, and more than anything, they demand time. Now attention naturally shifts toward another familiar name within this ecosystem, MicroStrategy, a company that, over the years, has become deeply intertwined with Bitcoin's narrative. Often seen as a proxy, but not a perfect one, moves differently, sometimes slower, sometimes more volatile, influenced not only by Bitcoin, but by broader capital strategies, market sentiment, and structural positioning. For some, it represents an alternative lens, a different way to engage with Bitcoin's trajectory over time. Not better, not worse, just different. Take a moment here. If this resonates, if you felt this tension between fear and curiosity, like the video and share your thoughts below, because these conversations matter more than they seem. Now back to the market itself. It feels heavy. That's the first impression. But underneath that weight, there is something else. Structure. Patterns that don't announce themselves loudly, but quietly repeat over time. If you look back across previous cycles, certain price zones begin to stand out. Areas where accumulation tends to occur. Not instantly, not perfectly, but consistently enough to leave a trace. Moments where long-term participants begin to position themselves, often when sentiment is weakest. And historically, when Bitcoin has hovered around similar levels, forward-looking returns over extended periods have often been positive, not immediate, not guaranteed, and rarely smooth. But over time, there has been a tendency toward recovery and expansion. Across multiple cycles, similar conditions have preceded meaningful upside. Sometimes moderate, sometimes significant, always uncertain in the moment, but clearer in hindsight. And when you begin to compare Bitcoin with assets closely tied to it, something else emerges. Amplification. Certain assets don't just follow Bitcoin, they react to it. They move with greater intensity. When Bitcoin rises, they can rise faster. When it falls, they can fall harder. That dual nature is what makes them powerful and dangerous at the same time. This is where perspective becomes everything, because charts don't predict the future. Indicators don't guarantee outcomes. They frame possibilities. They reveal tendencies. They show you where probabilities may begin to shift, but they never remove uncertainty. Looking at broader signals, momentum indicators, long-term moving averages, relative strength, there have been moments where Bitcoin has entered zones of relative undervaluation. Not absolute certainty, but areas where the balance between risk and reward begins to change. Zoom out even further, and a bigger picture begins to take shape. Markets move in cycles: expansion, contraction, accumulation, distribution. Again and again. Not identical, but familiar, like waves that never repeat exactly, yet follow the same rhythm. And in several past instances, when Bitcoin has approached similar structural zones, the months and years that followed have brought recovery and growth. The magnitude has varied. The timing has differed. But the pattern has appeared often enough to matter. Still, context cannot be ignored. The sample size is limited. Market evolves. New players enter. New dynamics emerge. What worked before does not guarantee repetition. But patterns leave traces. And right now, some of those traces are beginning to appear again. There's also another concept quietly at play here: mean reversion. The idea that over time, price tends to gravitate back toward its long-term trend. Not quickly, not predictably, but gradually. If Bitcoin simply continues along a path similar to its historical trajectory, without extreme assumptions, the outcomes over multi-year horizons can still be significant. Not necessarily explosive, but meaningful. And when those movements intersect with assets that amplify Bitcoin's behavior, the range of possible outcomes expands even further. But again, this is not certainty. This is possibility. And possibility requires patience. Because markets do not reward urgency. They test conviction. They create doubt at precisely the moments when clarity feels farthest away. They challenge you to act or not act when both choices feel uncomfortable. And yet, those same moments, when uncertainty is highest, are often where positioning quietly begins. Not loudly, not dramatically, but steadily. So if you're still here, take a moment. Like the video. Share your perspective. Do you see uncertainty? Or do you see structure beneath the uncertainty? Because both are present. Markets are not just numbers on a screen. They are reflections of behavior, of belief, of emotion, a constant tension between fear and conviction, between short-term reaction and long-term perspective. And right now, we are standing in one of those transitional spaces, where the next phase has not fully revealed itself yet, but the foundation is forming beneath the surface. Subscribe if you want to follow how this unfolds. Stay connected. Stay aware, because these quiet moments are often where the real story begins.